Salute, folks. It's your boy, the insurance junkie, your fiduciary fella, the all-star advisor Alonzo Hall, your social media insurance bro, back again today to whack and tap on your head with yet another ADH Wealth Solutions article. Today's article is going to be from RIA Biz in regards to Robinhood and some things they've got going on. As you know, we're going to read the article and add a little bit of my personal commentary. Before we continue, make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. Lastly, to contribute to channel growth or to schedule an appointment with a licensed financial professional, the links are in the description of this video. So as we proceed to give you what you need, this is an article written for RIA Biz by Oysen Breen, written October 6, 2025. It's entitled Robinhood, ready to open the gates on one-trade alts for its high-click investors, but Morningstar warns its move fast, break things history could drive its new closed-end fund off the tracks. So, trouble behind, trouble ahead. Robinhood CEO Vlad Tenev better watch his speed as he barrels ahead with a new semi-illiquid private fund offering. Morningstar sees a potential train wreck just down the tracks for investors who are notorious for loving the digital game of trading in liquid markets. Robinhood is known for bold, innovative moves, but its new fund filing seems reckless, writes Brian Armour, Morningstar Director of ETF and Passive Strategies Research for North America, in a September research note. Now, here's a funny tidbit, ladies and gentlemen. As financial professionals, we're all regulated. The reality is, when you're in a public offering company or an investment company, you generally assume the CEOs, etc., are also securities licensed. Well, the CEO of Robinhood is not securities licensed. So, let's continue. Robinhood launched the free stock trading era, a gamified app, meme stocks, and its latest foray, sports betting, all with great success, except for the $110 million in fines it's racked up in the past 5 years for misleading investors and sloppy security. Now, it's filing with the SEC, the Securities and Exchange Commission, to sell a complex alts fund to its own cryptocurrency-enriched investors. And it's likely to be a big success, again. But that makes the sight unseen product an even bigger problem, Morningstar asserts. So Robinhood successfully promotes certain types of investing on their platform. So it could become big with their customers, says Armour in an RIA Biz interview. Armour didn't elaborate on certain types of investing, but his firm gave a good indication of its concerns regarding Robinhood's 25.2 million, often young and impulsive consumers. So, ladies and gentlemen, remember, we have a shift going on in generational wealth from the youth from an older generation to the youth. There was an old guard of investing, a way that has been tried and true and has been done for over 100 years. And then there's this new guard of investing, something that is very volatile. You guys are very familiar with, the lazy monkeys or the NFTs. Those were the biggest thing, and then they blew up. So some things need to stay old and just evolve with the people as opposed to getting completely brand new. So it is a complex product aimed at a fast trading audience, creating a risky mismatch since Robinhood's user base has shown their trend-chasing attitude, not the patience, due diligence, and long-term discipline that a private equity strategy demands, says a Morningstar spokesman. So, ladies and gentlemen, this is one of the things that often bothers me when I talk to other financial professionals and they ask, do you have your investment license? And they're only holding their Series 6. They don't know anything about risk tolerance, time horizon, or anything called Dalbar. So the average time horizon is 20 years, but Dalbar actually rates and follows the trend of investors' returns over the course of 30 years, following the highest index, which is the S&P 500. Let's continue. So, experience is lacking. In an unusually sharp September 16th research report, Morningstar said the fund could spell disaster for investors and waved a red flag about the company's move fast, break things past as an upstart trading platform. The firm is operating outside of the circle of competence, lacks money management experience, and has never offered access to private markets in the US, Armour writes. Investors can already access private markets via better investment managers and in better vehicles. Investors should be cautious. Robinhood has a track record of winning at the expense of its customers, wrote Armour. So some of your alternatives are things like Charles Schwab stock slices, Fidelity, or Vanguard, if you want to go in there. Now again, the difficulty is most people are unaware that there is really an amount that you should put in that considers it investing. If you go to Charles Schwab, it's going to be $25,000. Then you have to pay a fee to the advisor of $300. And then there's other fees and things. But if you don't have a certain level, you're not even considered investing. However, that shouldn't deter you. That said, Robinhood's embrace of cryptocurrency means many of its investors got rich on such an alternative investment. As of December 31 last year, 7.7% or $38 billion of Robinhood's assets were cryptocurrencies. At the time, Bitcoin, BTC, was priced at $93K. The BTC price now stands at $125,000, or a leap of more than 30%. Investors are also seeing mostly upside in Robinhood's strategy. Its shares, HOOD is its ticker symbol, hit a new 52-week high of $153.83 today on October 6th, before settling back to close at $144.26, off 2.97% or $4.41. It hit a 52-week low of $22.72 in October a year ago. So again, when you're looking at trying to be an investor, you want to look at something called the 52-week moving average. A lot of these people online are coming in and out. Okay, and when they're coming in and out, it's something that you don't want to be extremely fast.
7 minutes.
You want to take time with these things. And the reason why is because that is how investing works. You have to have a time horizon, and you understand that the average time horizon is about 20 years. So breaking down barriers. Robinhood declined to comment, stating it is in a strict quiet period. It filed its Form N2 with the SEC September 15th, registering its new private equity fund, Robinhood Ventures Fund 1. In August, it launched a new alternative assets, ALTS, unit, Robinhood Ventures, and is still awaiting approval from federal regulators under the 40 Act. Yet Robinhood has already been promoting the move in a prospectus and a media release. The fund will break down barriers, the company claims in its prospectus. Alternative investments have traditionally been only open to investors who meet specific financial thresholds set by the SEC, including high net worth, high minimum investments, and limited liquidity. So you need to be an accredited investor. The prospectus argues that its new fund levels the playing field for retail investors. For decades, wealthy people and institutions have invested in private companies, while retail investors have been unfairly locked out, says Tenev in the linked release. With Robinhood Ventures, everyday people will be able to invest in opportunities once reserved for the elite. Robinhood also accepts its fund could post substantial losses, and it uses the word speculative 28 times in its N2 finding. So risks and reward. Robinhood's new fund will invest long-term in a concentrated portfolio of around 5 growth companies at the frontiers of the industry, including defense, AI, robotics, and financial technology, according to SEC filings. The fund, which can borrow against 1/3 of its assets to increase its leverage, will invest up to 20% of its assets in each of the 5 companies it selects, including through third-party funds, pooled investments, and special purpose vehicles. The fund will weigh investments in cryptocurrency as well as more vanilla funds and stocks, including ETFs, mutual funds, and money market funds. The move will open up investments to retail investors who traditionally have been limited to publicly listed companies. Those stocks are dwindling. down from 7,000 in the year 2000 to 4,000 last year, according to World Bank data. As of August 25th, publicly traded companies globally had a market value estimated at $127 trillion. In contrast, the value of private companies surpassed $10 trillion in the first quarter of 2025. Global alts are likely to surge 74% in value to $29.2 trillion by 2029 from $16.8 trillion in 2023, according to Barron's.
When are you through?
Fair warning. Even as some of these private companies have become household names, exposure to them remains gated to the vast majority of retail investors, it adds. Private companies have traditionally created significant value for investors in private markets. The fund is designated to provide retail investors with exposure and a fee structure aligned with Robinhood's mission to democratize finance. It has yet to clarify its fee structure, except for stating that asset and performance-based fees levied by any alts funds it invests in will be passed on to retail investors. Morningstar sees the implication of democratization as fair warning as much as a promise of goodwill. Another win for democratized access? I don't think so, says Armin. So that's going to be it for today, folks. Make sure you hit that like, drop a comment, subscribe, and hit that notification bell so you're made aware every time I release new content. And as always, share, share, share. With that being said, ladies and gentlemen, wipe ass. Work in progress every day and see success. Wipe ass. Work in progress every day and see success. Wipe ass. Work in progress every day and see success. And remember, folks, when people challenge you, they don't challenge you to challenge you, but they challenge you to challenge you. Accept the challenge. Salute.